Doing another video about silver this time, which is kind of ignored in the trading and investing community. So yeah, so the black ones, apparently the black ones are silver, and the purple ones, the magenta color, is the gold. As you can see, the drop was correlated, the peak was also correlated, and here's something interesting. Silver dropped before gold did, so it was kind of a leading commodity, giving us a heads up. Okay, silver is dropping. We're justifying it with lower in demand and correction, what have you. But gold is still strong. No, it's not strong. May 2011, silver dropped. September 2011, so less than 6 months later, started the fall of gold. So it was giving us some warnings into the future. It doesn't mean that 100% of the time silver is the leading indicator for gold. It doesn't mean that gold is the leading indicator for silver all the time. The only thing that it means is they are correlated. As you can see from this chart, this rise and this correction here. And one more thing, when one of them changes direction and another one does not, here gold is making higher highs and higher lows, higher high, higher low, higher high. We'll probably wait for a higher low sometime in the next few months. But silver, what did it do? Higher low and another lower low. The trend was still downwards. So they moved in this portion of the chart. In this portion of the chart, I wish I anchored that here. For 1,400 days, they moved in the opposite direction. Gold was going high, and it was going low, going down. So what does it mean? Is the relationship is over? Is it no longer the case that these two pairs are brothers and sisters? They are sharing a beautiful kinship, that this kinship is not recent. It was forever, as long as my chart can take me. It's been happening all the time. So are we in those times when they said, okay, enough is enough, we're breaking up, we're going our separate directions, no pun intended, or intended, I don't know. And gold said, I'm going high. Silver said, see ya, I'm going to stay here. Doubtful. Because let's look at what silver did. And please, I'm getting self-conscious about this. Please ignore this portion of, it's not an advertisement from me for this broker. It's trading views. I will probably blur this part out. But silver said, see ya, and I'll stay here. I'll trade at $12 an ounce while you are advancing towards your previous highest high ever. Doubtful. So what is it doing? What's wrong with silver? Why isn't it following suit? Gold said, come on up. The economies around the world are doing terribly. They're printing huge sums of money. US dollar, euro, yen, all of them are printing money. Like, they have a printer and there's no back end. There's no real commodity. There's no real rare thing that you cannot print to back it up. So we should be heading upwards, and gold is doing that, but silver is lagging behind. All right. what is going on. Here's what's going on. What is going on is there's a golden opportunity for you to buy silver right now if you fell behind gold. Reason number one, if you look up how much it costs to produce an ounce of silver, and the price is very the same as oil. Oil could be made in Saudi Arabia and Iraq, which is really cheap, less than $20 a barrel, or it could be made in Canada's shale, which costs, I don't know, about more than $80 a barrel, and not profitable. So the price of production of silver varies, but it averages around here, which is $9. So when we hit $12, and those who were long on silver thought to themselves, holy shoot, we are about to be screwed. I don't know what they thought when they sold their silver, when it reached the lowest point in probably how many years? Since 2011. So in 9 years, it's reached its lowest low with a difference of $2 from production cost. So if it got below the production cost, the mines would say, okay, we're done. We're not producing anything. We're making something that costs $9 now. Yeah. Then we have to sell it at a lower price. And silver, not as opposed to gold, but more than gold, is used not only for jewelries and these niche things, and it is not only used as a reserve sort of asset when you want to keep your money safe, when you want to keep the value of your wealth, but also it's used in electronics and other industries. So in some sense, it is also comparable to copper and lead and other different metals. So it acts different roles in the whole financial industry. So when it got around $11 an ounce, $12 an ounce, you say, oh, this is a great opportunity to capitalize on. When it were around here, I bought some silver. When it were around $14 here, yeah, around here, I bought some. Then I saw some rally and it dropped. I didn't really care. I didn't have more money to buy more silver. This is the only reason I didn't enter or exit the market here. I didn't have more money to add. But then I saw this divergence here. I said, oh, silver is lagging. And how do we know it's lagging? As I said, macroeconomic indicators, they're printing huge amounts of money. Since 2011, even if you say this is a bubble and it wasn't worth $50 an ounce for silver, but since that time, look at the production cost. So it's almost at par with this production cost. And the amount of money that exists in the world, not only for US dollar, but for other central banks, has increased how many fold so far? And we have only so much silver. It's not even like oil that you can produce and do fracturing and do other stuff to produce even more and increase the lifespan of how much oil we have. So we have a panic in the 70s, and then now we are producing oil, extracting oil more than ever. But silver has a limited amount to be extracted from the different mines, so that's why it's considered valuable. A valuable commodity, it's a luxury commodity. So when it got to this point, you would think, all right, it is lagging behind gold. This is an idea. This is not a call for trade. And by the way, a disclaimer, I'm just explaining my strategy and how I'm entering or exiting the Forex market. Your strategy is your strategy. Your decisions are yours. I'm doing this for educational purposes only. There's no trading signals here. I am not giving any trading signals. I've been ignorant of saying this in the past. I didn't know that, but I definitely should be mentioning this. So yeah, you see the divergence, but it's not a signal to trade. So what should we do? We look at silver all by itself. So we get rid of the gold. Let me do that. We get rid of the gold. Now we are left with the silver chart with a hint that it might go up in the future. There's a high possibility that this low is the one. This is the one, and I want to go long on silver. So what do we do? What is the trading strategy? Where do we enter the market? How do we enter it? If you saw my analysis of gold, this is pretty much the same. This looks the same all the way to here. Then it makes a more beautiful pattern, which is this low. Why? Here we have a downward movement. We can draw a trend line for this downward movement from the highest point up until the time it made the lowest low. Let's say we saw the chart around here before it made this low. So yeah, here. Let's put it here. We'll change it. We saw the chart here, so it broke out, but it kind of faked us out. Then it went down and made a new low, made another high, then went down. So it's not capturing the amount of divergence here. So let's put it here. Again, something looks like an impulse, something looks like a correction, a long correction. You can go long when it breaks out, take partial profit, move your stop from here to there, and then you are out of the trade at break even. No money lost, no love lost, no love found. But I wouldn't do that. I wouldn't look at this little thing as an impulse, because we had a lot of these little things. It doesn't look to me as something which is at a higher level, higher degree in terms of impulsivity, momentum, compared with these other corrections. So I wouldn't initiate this trade. But then you wait and you see another low here. So this will be our definitive trend line. And we have all the confirmation that we need for our trend line. One more beautiful thing. So we made a low here. It pulled back. Then it made another low here. One thing I keep talking about, and I cannot shut up about this, and I cannot talk enough about. I'm using Fibonacci extensions because it's called Fibonacci extensions, not because I use them. But the previous impulse, let's say it started here. This is the previous impulse. That was the previous impulse. This is the correction. This is apparently the new impulse in the corrective direction. And it did not even cover 13% of the previous impulse. What does it tell us? I'll make a video about MACD and how it shows divergence and how people use it for divergence, and how you should not use MACD for divergence. Instead, use your eyeballs, or you can use extension lines to calculate what percentage of the previous movement you covered in your newer impulse. And until you develop your eyeballing capabilities, you can use these extension lines with, let's say, 10%, 20%, 50%, 90%. And as you can see, yeah, the previous impulse, correction, impulse, it didn't cover even the 13%. I say it's less than 10%. So it's a classic overlapping waves. One wave up, another wave down. It's overlapping. And it's not going anywhere. If you connect the bottoms here, you can see that it's not going any lower. And so for some trading strategies, this is a perfect fake out. This was the previous low. You draw this line, it touches it, it bounces back up. Perfect fake out. You can place a buy order, put your stop here. I would not recommend putting a stop here, because imagine it went up and went down to $10, and then you sold silver at $10 when you should be buying more. No, I mean, if you have the capital, this is a golden opportunity. Even if it bounces back to $9, you will buy even more. Because it's not cryptocurrency that can crash any day. Some news come out that somebody stole or hacked the system and did this or did that and lose 70% of its value over a couple of months. It's silver. It's been around forever. And we're doing technical analysis. We believe history repeats itself. So we don't believe in any miracles than like David Hume's way of thinking that the sun could not shine tomorrow, stop shining the next minute. No, we're the opposites. We believe that the history will repeat itself. So we're not expecting that silver will go out of business. And it's not something that will go out of business. As I said, it's not a cryptocurrency that will people say, it's not worth anything anymore. It was a scam. It was a pyramid scheme. I don't recall anybody calling silver a pyramid scheme. So yeah, you have your divergence here. If you like MACD, you can add the indicator to show it to you, to prove it to you. But essentially what we did was we looked at the previous downward movement and saw how much this new downward movement covered, which is less than 10%. Then we said, okay, we have some divergence. Let me add indicators for those indicator fans. MACD, there you have it. Now I should get rid of some of these extra lines. So there are several things that I like about MACD and several things that I don't like about MACD. One thing about MACD is that it shows us the trend direction, I don't know, 20, 10, 50% of the time, the divergence, it shows the divergences, which is really good. One thing I don't like about MACD is that the other 50% of the time, it doesn't show us the divergence that is already there. You can see it with your eyeballs. So you can see the divergence with your eyeballs by just calculating how much of the previous downward movement it's covered in the next downward movement. 100% of the time, you can see it, or you can calculate it. But if you rely on MACD, sometimes it says, I'm in the mood, I'll show it to you. Sometimes it says, it's not there. And it's a lagging indicator, so it didn't identify this low here. It's waiting for some signal to go back up. But let's see. I cannot even connect this one to that one since it identified this low, this insignificant low, good for nothing low as a low, but I'll do my best. So this was our actual low. This is our apparent fake out. It's a flat line here, so it doesn't show it as a divergence. So MACD failed to show us this divergence, but we will not fail to take advantage of this trading opportunity. So let me get rid of this. What would be my personal trading approach? The easiest, the laziest, and probably the safest will be bide your time. This is your previous high. If it goes above and beyond your previous high, which means it broke out, you'll buy, put your stop here, then you put your targets accordingly. My ultimate target would be at least to get to the previous high in the long run. And how much would that risk and reward be with this very conservative strategy? Reward to risk ratio, it is, come on, show it to me, man. 3.3. This is an amazing risk to reward ratio to something that virtually has no risk because I'm not putting a stop here. My stop is not here. I have 0 stops on silver right now. I have 0 breaks on silver because I know I will not go broke. And I'm doing this as an investment, not as trading. So I'm not using my trading money for silver. I'm doing it as investment, something safe, something that is as cheap as it can ever be, unless tomorrow the same thing happens that happened like 100 years ago with aluminum that was pretty expensive to extract and produce, and somebody made it with a very cheap and simple chemical procedure, and the whole industry's needs were solved when aluminum was one of the cheapest metals that you could buy. The same could happen with silver tomorrow or the next month or the next year. But it could happen to gold as well. It could happen to copper and oil or anything else as well. So if anybody's trading those, they'll face the same type of problem. But yeah, these are the times where people start doubting. They start saying these things that maybe since it's trading at $11 and nobody's buying it, maybe they're coming up with something, or it's not worth it anymore. It was worth it back in the days, but it's not worth it anymore. Let's look at when it was $11. The last time it was $11 was 2006, 14 years ago. Another time it was still $11. So 11 years ago. Can you imagine? This chart is telling. It's very telling, especially when you overlay gold on it and you see that it's lagging behind and they always followed each other. So this is my take for this golden opportunity to buy silver, especially if you lag behind and didn't catch the beautiful rally of gold. Don't fall behind when silver does its thing and follows its old lifelong brother. Thank you for watching.